It has been an extraordinary quarter in the real estate market, opening to some of the lowest levels of inquiries, viewing and completions. The impact after several years of extreme cost pressures on developers, followed by a year of top-level finance costs for both developers and mortgage borrowers, had brought the sector into a state of dwindling housing starts and slowing levels of sales and completion.
In the first three quarters of the year was an environment where borrowing money to buy a house for your average person was just not affordable. You know, you couldn't put it into context. The kind of money you were having to pay was off the scale. Yeah? You're talking about somebody who was paying a 10 million mortgage in January. Yeah, the best rate available in January would have been, for April, would have been like 130,000. Yeah. Now they're talking about 108,000. I mean, you're saving 22,000 a month because of a 3.5% rate drop.
However, the profound shift in mortgage rates saw buyers develop a new appetite, with the buying side springing back to life. The third quarter also brought concerted price rises in the rental market as landlords facing robust demand also moved to cover the rising cost.
But let's say I want to buy a 20 million shilling property and that's what I need. Don't think of that when I have the 20 million, I'm going to buy it. Start now, buy something small. In a couple of years, sell it off. It'll be much higher. Buy another one at that rate, sell it off. So that way you start small, but in a shorter period of time, you'll be able to afford the property that you need for yourself. So use capital appreciation in the property market for you, especially if you're beginning as a first. You might be a first property owner and not yet a first home owner, but it will lead to you getting your home faster.
Notable is the way the diaspora is now becoming organized, with the setup of circles in a trend that could see them become very significant players in the mortgage and property sectors.
If I took a mortgage 10 years ago in the US, right, on a property worth the equivalent to 10 million shillings, at 3%, which is the prevailing rate for a mortgage in the US, 3%, I'll just point it out, the prevailing rate here is 19, yeah? In America they get it at 3%. But if I did take a mortgage at 3% in America, okay, with the property performance of the American market, yeah, I would have made a profit of about 3.7 million shillings. Not a bad profit, but that's what I'd have made.
The real estate market has lived through its hardest knock since the nation's property boom began, yet it has remained substantially unscathed. The extremely solid nature of the market and the ongoing demand for quality housing will see positive sentiments for the sector as we approach the general elections. Josephine Wawera, GBS.